There's a couple keys to operating a great business. And in this conversation, Rick Sedberry and Jennifer Sedberry with Movement Mortgage talk about how their team and the partnership that they've made with Movement Mortgage allows them to operate their business very efficiently. And if you're a lender or you're in business and you want to learn how to find the team with the same values that you have so you can really operate at a high level, check out this conversation with Rick and Jennifer.
We just talked in the last segment, like there's a lot of difficult transactions that we have. You guys are in a unique market, though. You have a rural area in which you do business. There's Hammond, which has the Southeastern College, which there's some college kids and first-time home buyers coming out of school. That's an exciting thing for them. You have some business owners that are there that, operate small businesses that might not have a great tax return to lend on. And then you have these people that work in blue-collar jobs, right? Yes, they're going to be going to the plants and driving out of Tangi to go, and they might see 1099. And so it's just difficult transaction, right?
Right.
So I want to focus first on that rural type of property. Whenever y'all are dealing with that from a lending standpoint, like how do y'all put those types of deals together whenever it's big acreage, family-owned property, people who are acquiring property from kids that donated, things like how do y'all handle those types of situations?
So what we try to do is, when I meet with the client is, okay, we're going to go through every loan program, whether you qualify for it or not. We're going to talk about it, and I'm going to tell you why it's not the best option. And so that way they know, okay, we might only have one, we might have a few. And that way each situation is unique, okay? We're blessed that all of Tangipahoa Parish is considered rural.
Yeah.
So, the first thing we always ask is...
Options open.
Yes. Do you have any money? And the average home buyer in the market today doesn't.
Right.
So that first option we're always going to look at is that rural development program. It's a great program. It's 100% financing. I tell them all the time, if we were in Metairie, we wouldn't be talking about it.
Yeah.
But crazy thing is, if you didn't know, the West Bank is 100% rural.
Really?
You can buy
West
a
Bank of
house
New Orleans, yeah.
in Gretna
Yep.
and get an RD loan.
Wow.
Which is mind-blowing.
Really?
Yes.
Literally
Yes.
throw a football, hit New Orleans, hit the east side of New Orleans, you're on the West Bank.
They've talked about eliminating certain areas. Like they said, we're going to eliminate the city limits of Hammond or eliminate, city limits of Mandeville and Covington. But then something always happens, hurricane.
Yeah.
A swing in the market.
Swing in the market. So
Yeah.
they go, never mind, we're going to hold off. And so as of right now, they still haven't eliminated those markets. So it's a great program. They keep... It used to be a challenge hitting their income limits because it's an income-based program, but every year RD bumps up the income limits, and you can make a substantial amount now for typically a young, either single or young couple just starting out. They're allowed to make up to almost $119,000 a year,
Nice.
and still get 100%,
Wow.
which is great.
Yeah.
Some of the challenges we run into on the rural development side is what I like to call their financial blood pressure. Like how much house can they afford? Yeah. And that RD program, they're strict on how much they let you buy. So a lot of times they may qualify for that, but not at the price point that they want.
I see.
So then we have to get, okay, let's look at other creative options.
Yeah.
And so...
so that's great for like somebody graduating from school
Yes.
that is looking to get their first house.
Yes.
And they have a job, but they live in Hammond, and they want to be in their area where you can go to Coretta's, you can go to all these restaurants and have, but you're not...
Dang it. Now I want a margarita. Shit.
But you can take advantage of that. And,
Absolutely, yes. And there's all kind of different programs. We look at down payment assistance if we have to go through that. There's programs through the state. There's programs through certain parishes. Movement actually came out with their own down payment assistance program, which is great. We do a ton of those. It's called a Movement Boost. There's no down payment no income requirements on it, and so we do quite a bit of those.
Nice. So tell me about the situation where you have somebody who works in a plant and they're traveling and they are contract based, so they are in the same field and industry, which is important, right?
Yes.
Yes.
In order for you to qualify from an employment standpoint, you have to be in the same industry.
Yeah, ideally.
Yeah.
Especially if there's
yeah.
multiple jobs.
Yeah, and so and that would be seen as multiple jobs. Is my point. So
right.
how are you putting together somebody in that situation, in that type of difficult situation, and helping them create a income perspective or picture that will allow them to qualify?
So we almost have to put on our accounting hat, if you will, because a lot of these jobs, they may be at a job for 2 weeks. They might be at a job for 2 months. They might leave and come back to the same job. And then depending on the job that they're at, they could be at a different hourly rate of pay. So we actually have to collect 12 months of paycheck stubs. Which can be a challenge,
Sure.
Especially if they're no longer working for these companies a year ago. I mean, to us, it's nothing to have a client to have 6-7 jobs over the last 2 years, and if I'm asking them from for pay stubs from back in 2023 can be a challenge.
They're blue collar. They're not saving them.
No,
They're-
they don't. They
yeah.
have an app. They have an app.
Yeah.
And they literally start screenshotting us.
Isn't it wild though that they're some of the best paid?
Yeah.
Yes,
Right,
they are
and
paid
their
very
debt
well.
income ratios are really good. So
Yeah.
it's
Yes.
like on that end, they're a great client. You
Yeah,
just gotta
they're
get the data.
yeah. Once you get past their income, they're good clients, and
Right,
they
and so
do
it's
everything
just-
you ask. And
It's wild that they have lenders that run away from that just because of that small challenge.
Yeah, it
so I
just
love
takes
that
a
y'all
little
offer
bit-
that solution.
A little bit more effort, a little bit, we actually do a spreadsheet and document everything down. We just had one recently, yesterday, that we did. He actually doesn't have a house yet. And I said, okay, well, we're going to wherewithal to submit your stuff to an underwriter ahead of time. And Movement allows us to do that. So before I have them go sign a contract, I'll say, let's get all your stuff in front of an underwriter. And, the underwriter, I always joke, it sounds like the, professional wrestlers term, the underwriter. They have the power of the pen. And so they're going to say yes or no. So sometimes we have to take that extra step to let them review the stuff.
Yeah.
although you become pretty good at,
Yeah, we've done it enough where I
you
can say,
pre-write, you pre-write, don't
oh,
you?
yeah, we
100%.
can, yeah.
And that, that's one of the things I think that separates us sometimes from other lenders is, I could just give you a pre-approval letter, but I don't want to do that. Like, I want to make sure, like, if I'm putting my name to a letter, you want to know that you're 100% rock solid.
And that's a movement thing, right? Like not every mortgage lender is going to underwrite somebody before a contract's in place, right? And so what is that like? And that solves a ton of problems. Again,
does.
that helps listing agents know that when they get a pre-approval from Rick and Jennifer, that is
not gonna have problems.
that's a good letter, right? They can rely on that.
Absolutely.
And so what is how does that work from a movement standpoint? When do y'all take that step?
So if it's something which is the bulk of our clients,
Yeah.
if it's something that's out of the ordinary. So, I mean, if you have a person that's a straight salary and they're, putting a down payment down,
We don't get those.
we don't worry
yeah.
about those as hard. But if you got somebody who's what we call variable, meaning every check is different. Okay. They might have 60 hours one week. They might have 38 the next.
Yeah.
That's what's called a variable income employee.
Gotcha.
So we have to gather up all that stuff. We have to verify all their employers, make sure they have a 2-year history in that same field. And we send all that to an underwriter with this spreadsheet built out.
Nice. And they're going to stamp it, right?
Yes.
Contingent
They're going to issue
on
a conditional approval
Yeah.
and say,
Yeah.
okay, they can go write an offer on a house up to this
such
price.
a, yeah.
Yep. And this condition, like obviously, when you get the appraisal back and you get the title work back, it's a condition on those things being satisfied.
Right,
but
right.
the box is checked on the individual
Yes,
before you
which
even
is
get started.
important,
And I
which is
mean,
very
how does that shorten the timeline on underwriting?
Oh, absolutely.
Yeah.
Because when they write a contract, they know typically we're like, okay, we're just going to get an appraisal, title, insurance. In a perfect world, we might get an updated check stub to show that they're still working, depending on how fast they found a house, and we're ready to move.
Yeah. So just a side note on this difficult section of the of our conversation today. Is insurance as huge of an issue in Tangipahoa Parish as it is in St. Tammany?
So it's gotten better.
It's gotten
a lot
yeah.
better over the years.
After Ida, it was really, really tough for a few years, but it's kind of leveling back off in Tangipahoa Parish.
Yeah,
That's good.
The
Now,
longer
St.
we
Tammy's
go
a little
without
higher.
the longer we go without a big storm, the better.
New Orleans is really high.
New Orleans is really high. They haven't gotten better at all.
Yeah, for sure. I knew that. I mean,
yeah.
I just don't hear. I mean, we hear people complain about it, and not complain. Just talk about the issues with it and try to figure out solutions to it. But I don't ever really consider that a Tangipahoa Parish issue as much now after
Yeah.
the last couple of years.
Yeah, typically there's only about maybe 4 or 5 insurance carriers in the state right now.
Yeah.
Yeah.
So it's a matter of, fitting, and it's always fun. Like we'll send it out to a couple of different companies and they all come back with the same carrier.
Yeah.
Like SageSure is one of the
Yeah.
most
Yeah.
popular
Yeah.
ones.
We've been seeing a
SageSure,
lot of them.
Cajun
Cajun.
underwriters, those are the big ones. And so we get the same quotes. And that's something also we do for our clients because of insurance is I don't want them making an offer or looking in a house without letting me get a quote up front on insurance.
Nice.
Because
Yeah.
it could vary house to house.
Yeah, and
it can kick them
big,
out of approval for sure.
and big in Tangipahoa is mobile homes and manufactured homes, and the insurance is high. And although their property is cheap, their insurance is high and can price them right out of and being able to afford it. And they're like, it's $110,000 mobile home, but you're gonna have $5,000 worth of insurance. Then you're priced right out of it.
Yeah.
So sometimes it's better to find a smaller house and
Then buy my home.